Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for the end of trading on Wednesday, and we're June 12th, 2019, about 4:10 p.m. Central Daylight Time. Well, as you can see, a good day up in the wheat and the soybeans, especially beans. The rumor mills and our sources, it's not just me, but it's the industry sources, are hearing that there's going to be a lot more acreage lost in soybeans. The 10-day forecast I'm looking at just has rain again in almost 8 out of 10 days. How much rain? Well, that'll vary from area to area, but we're not drying out. In the Chicago area, even away from the lake, it looks like the highs will be a week from now to 10 days are going to be in the mid-70s. So that heat isn't coming. And you're also seeing that reflected in the prices, as you can see, in the energy markets where we're not getting that demand. I find it interesting because I was on Fox today and other people are talking, maybe the EIA doesn't know what they're doing. And I'm going, well, what numbers do make sense to you then? When the market falls sharply and you're approaching this $50 mark, suddenly the EIA numbers don't work. Then I say, what about the API? They were bigger than this. You don't get the right answers. Simply put, as long as we have trade wars in place in some of the markets, you're getting demand backing off from them, and it's scaring things. In the grain markets, what's different is we have weather. It's a real weather market. You're already at the corn market point in time where come this weekend, in most areas, whatever's planted, that's it. People will either move to beans or they'll go in to prevent acreage. It's going to be one of the two. So when we look at soybeans, yes, you finished today up, in fact, for the week, you're up 21 3/4. Today you were up 878, and you're trading for all purposes just at or slightly over, finally, that 18-week moving average of closes. Now, can we stay over it the way we did here for a while? That's going to be the big question. And the reason you're going up, not down, is weather. And keep that in the back of your mind. It's not about demand. It's about weather at this point. When I look at the chart and I go to the daily bar chart, this is the only gap that is still open. This was a gap, and you can see where we're at. Remember, I'm walking you through this again because now we're in the new crop. I think it's time to leave the July beans and start focusing on the new crop beans. And as you can see, we're getting a nice bounce. In terms of the swing line, you have a lower low, higher high. So as nice as today's rally of 18.5 cents is, you're still not over that 921 1/4 area. We'll see if you can get there. It's 16 cents away. In terms of resistance, to get to that number and through it and stay over it, you got to get over the 100-day moving average of closes, and you didn't do very well on the last attack of it. You fell back to the 18-day average. Is there a trend here? No. Is there a bias? Certainly. You have an upside bias because you've been staying over the 18-day moving average of closes, and you see a resistance point. And when you look at the Bollinger Bands, you can see that the market got over right here when we heard about all that bad weather, peaked out finally against the 100-day average. And again, if you come back here, that was where you peaked in the market, fell back, and you're marching back and forth. These are hard markets. If you think they're easy, how do you catch this play? You got to be a top picker and have guts of steel to come down. How do you know to cover against the 18-day average? Very, very difficult. In terms of momentum, you're knocking on the door, but not yet overbought. It takes a reading over 70, in my opinion, to label a market as overbought. You're not there in the slow stochastic. You're 2 points away. You could easily be there tonight on the opening. In the meal market, you have a different type of situation. You have a market that's got in the August meal. Remember, I've changed contracts on you now. We're no longer in July's. Lower highs, lower lows. What the market did do is when the swing line was set up, you had two support zones, 312.20, 308.40. The market approached both, hit them, held, and turned back up from there off the weather and fears that we won't have the supply for feed. When you come to the soybean oil market, you're literally in the August oil just stuck, going sideways, caught between your Bollinger top and the 18-day average for all purposes. Momentum is not a help. It's just drifting sideways, back and forth. Outside day up today, but even if it carried through, you don't have a trend. You got a lower low, higher high at work. In the corn market, the fear here, of course, and this is the Dees corn, new corn, where are you going to get people willing to let your corn go from? And what I mean by that is if I'm a farmer, what I haven't sold up at the 450 level, and we had that earlier, that means those people might not want to sell at this point, and that's because the weather continues to stay bad. They might say to themselves, not speculation, but at the end of the day, they may have another use for that corn and feed or something, and they're scared they won't get their crops. So in part, that's some of the psychology at work. You've got higher lows, higher highs, you're in an uptrend. Support comes in at the 430 and a quarter zone. You wouldn't want 427 taken out. I've got to say you're overbought. When you lost the embedded reading back here, and it began right in this zone, right there, there's the day that it happened. The goal was for price and 18-day average to make a run at each other. And I think they did that job. And now the market is coming up. Did it hit the number? Well, on this day yesterday, the low was 427.5. You were 427.3. You round up to the price, 427.5. You hit it yesterday, finally. And you're following through a little bit today from there. Don't know where you're going to go from it, but let me come back to that. Resistance is 462 and 3/4, support back at the 18-day average. In the wheat market, you can use some wheat as feed. Remember that. So instead of the market getting scared about wheat, now they're getting scared about feed needs, and you're getting the bid. Higher lows, higher highs, overbought market. Upper Bollinger Band could be where the market wants to go again. Now, when it broke out way back here, it ran over that Bollinger Band like it didn't exist. It backed away from it, but boy, it was just a powerhouse. I doubt that you get that 2 times in a row back to back. In the sugar market, the trend is up. You've got the pattern of higher lows, higher highs. Resistance, though. You broke out of a sideways action right here, as I like to call it. And when you break out of that sideways action, sometimes you don't go anywhere, but other times, just like you did out of this sideways action, you develop a trend. As it turns out, we developed a trend. The market has gotten itself into an embedded slow stochastic stage. If the market gets up to the 100-day upper Bollinger Band, wouldn't surprise me to see the pros take some money off the table. That doesn't mean they're bearish. Taking money off the table is a different event. In the Dees coffee, the battleground's the 18-day average up to resistance now at the 100-day. The 100-day was support on breaks. You can see how the market, when it ran to the, first of all, right here, it sort of stopped, held it. Then you had a run, and on the pullback, you found support at that number. Now what was support on the first rally back up is proving to be a little bit of a resistance, and that's because the market's got lower highs, lower lows, and momentum pointing down. It doesn't seem to want to develop a downtrend. It's had a correction. In the cocoa market, it's still following through from that situation I was telling you about Ghana and the Ivory Coast getting together with that ivory board, keeping some product off the market as they're trying to figure out pricing and so on. And you can see the vertical price rise you've had there. In the cotton market, the Bollinger Band's proving to be some good support for this market. Rally's probably still in trouble with the 18-day average of close. You are oversold, and this market probably to a degree today said, you know, if the beans are going and everything around me is going up, why am I laying down? And you might have got some buying off that mentality. In the cattle market, a big reversal because his feed costs roared again today. Obviously, you know, what do you do with that live animal? And now coming back down. We keep seeing the feeder cattle fail at the 18-day average of closes over and over and then get thrown back, but it's not an easy trend trade. You're almost forced to be a contra-trend trader, which I don't like, trying to pick a bottom to get back to that 18-day average. You don't get to it enough to sell it. You get close to it. In the hog market, I keep hearing from the USDA, we're going to see exports pick up in the second part of the year. I haven't seen it pick up. The market is now laying down in an oversold downtrend. Not a pretty chart, but it's the way that it's working. You know, one of the things that you might want to look at when you're trading are option strategies. And with that in mind, the CME group, not me, but the CME group has put out 25 proven strategies. You might want to use them in some of this crazy weather situation, so that you create positions that don't have the risk of a futures market. There's ways to do that. And yet you participate to a degree if a trend or if something disastrous happens to the upside or if the weather suddenly breaks. There's different ways to come up with those ideas. And they've given you not only how the math of it works and what happens, but ideas on how to place it, so on and so forth. How do you get a copy of this? It's really pretty simple. All you have to do is give us a call at 866-973-2077. You can also go to our website at www.iraepstein.com, and from there, all you've got to do is choose this, or our futures trading kit is the best choice because all this is in there. I'm Ira Epstein. You have a good day. I'll see you tomorrow.